Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Thursday, May 29th, 2014. Markets are up slightly across the board. S&P up 4 points, Dow up 11, Nasdaq up 11 as well. Technology leading percentage-wise today. Again, that's something we've seen over the last 2 weeks or so, as a lot of these beaten down tech shares have soared. Now, again, one good play was Twitter. Yesterday, I took a huge percentage gain off of that, literally in a couple days. And again, if you caught that with me, congratulations. Now, on to the next one. We just keep rotating and keep going back to the well, taking more profits out, finding new trades. And again, I posted a new trade yesterday afternoon for Research Center members. And again, right now, we're in the money slightly on that play and should see more and more money flow our way. Remember, if you're not a member here at InTheMoneyStocks.com, you can take the 7-day free trial if you're brand new. Otherwise, sign up for the Research Center at InTheMoneyStocks.com. And again, the Research Center is geared towards swing traders and investors. All right, couple things to go over that you must pay attention to. These are big, folks. See this trend line right here, connecting the gap up low from Tuesday to Wednesday to the low today of Thursday. This trend line, notice how it's perfectly parallel with this line. This line I've talked to my members about for quite some time, because if you zoom out, it's of the utmost importance. It comes through this pivot high, and actually if you zoom back even further, keep going, it comes from this high as well. So again, you take this high here, going back to late April, connect it to the early to mid-May high here, and then draw it straight out, and look at that. It comes perfectly up to this point, which we tagged today finally. And one thing I said to our members at InTheMoneyStocks.com in the Research Center in yesterday's daily analysis video, I said, listen, ultimately, the market most likely needs to hit this line. It doesn't have to, but that would be nice. You want it to hit that line because it shows that a target has been achieved. And sure enough, after 3 days of kind of kissing it underside here, you finally hit it right here today in the morning session. And then if you zoom in, look at what happened. Literally, as soon as you hit it, you sold off beautifully. You came down to this lower line and then bounced off and are now trading in this sideways pattern. Now, the interesting thing about this, folks, is that notice how these lines are perfectly parallel. So you basically have a channel here. And what this tells you is that any upsloping channel will eventually break to the downside. Doesn't mean it can't go up here a little bit and even go a little bit above this line, but ultimately, on anything upsloping will eventually break down, and anything downsloping will eventually break up. It's just the nature of the market. Because if you extend these lines out far enough, let's say even a year out from now, the market has to have pulled back below it at some point in the future. So always remember that. Anytime upsloping, eventually you'll have a move below and it'll come back in, and that's what we're going to eventually see here. So even though the market is dead in terms of volume, look at the volume as it's died out here into lunch, and really all this week has been very light. We've seen a little increase since Tuesday. Remember, Monday the markets were closed for Memorial Day. Tuesday, Wednesday, and today the market's volume has increased slightly, but nothing to write home about. You're still seeing this neutralish upside bias in the market where institutions are not buying, and we're just seeing the market stay on the sidelines, okay? So that's what we're seeing there. And ultimately, I do expect in the coming days, maybe into early next week, a break below this line. And we should head right towards this gap fill and this 200 moving average. And I actually think you'll see a push eventually through that line to this level here. All right, and again, the key level I'm watching, you have one level right here connecting these lows, which brings us to about the 188, 188.50 level. That would be your major target. And again, why is that important? I mean, let's think about it logically. Why would this line be more important than this pivot high or this gap fill or this gap fill here or anything else? And it's very simple. You always look for the symmetry in the markets. That's going to be the most important thing. Notice again how these trend lines are parallel. That's symmetry right there. That's the beauty of the markets and the way the markets trade. Well, if you zoom out again and take a look at that line I just put in, notice how this line here is parallel to this line here and to this line here. So that's going to be where you're going to get your bigger bounce, and that's around the 188 to 188.50 level. Now, keep in mind this line's sloping up, so maybe by next week it's at 190, but ultimately that is a very important line. Parallel lines, again, have a symmetry to them that will draw the market to those levels. Very cool stuff, guys. All right, so that's where we are right now. Again, spiders right now trading up 39 cents. Market actually has an intraday slight bullish consolidation pattern here, but I don't trust it, to be honest. I really don't trust it much. One interesting thing here, just over the last 20 or 30 minutes, the dollar yen's pushed up, and it hasn't pushed up the markets with it in light volume. That's somewhat unusual. So that means if we pull back, I wonder if the markets start coming in a little bit. We'll have to just keep an eye on this dollar yen trade along with the markets. Okay, other stocks that I'm currently in, one stock on the short side is Chevron. Look at Chevron, beautiful. I mean, if you're short Chevron, you're enjoying your time here, and that's one thing that I am short right now. And again, I just love how this chart has played out because you had this topping tail right here, and these lines are inconsequential at this point. They were from days ago, actually probably weeks ago at this point. But just look at that topping tail. Look at the market. Look at how strong the stock was there. Once it puts in the topping tail, it goes sideways for a little bit because there's still amateur idiot buyers, right, that are buying at such an extended level. And as it stalls out, then you start to see the break. Notice the push below the 20, the bounce back, and then the retrace here. Now you're going to come into a little bit more support at the 50, but ultimately it's going to go to the 200 and this gap fill right here. So that's where it's eventually going. Right now I'm a little over $2 in the money, and I'm fine with that. I mean, that's nice. It's not a huge gainer, but nonetheless, it's nice to be in a trade that's making you a little bit of money, especially when the markets are so dead and quiet. All right, well, let's take a look at some other key stocks out there. Apple again hit my target to the upside yesterday. It continues to push up. I do have a new level to watch here, and this one's a pretty important one. All right, right now this line is a good resistance level, but it's not the one I'm looking to short. It is not. All right, my level on Apple is this one to short up here. So if you can get to about a pierce of the 650 level, at this stage it's only another $18 or so, $19 away. That is going to be your level, and that is a great, I repeat, great level. So watch for that 650 pierce for a short. I think the split will take place ahead of time, so you just have to readjust that for the split. The chart won't change, though, so you'd still short that level once the split occurs. Okay? So that's what we have going in here, guys. And again, we'll watch very closely to see how things continue. And I'm just trying to scan through and see if there's anything else on the radar here, but I think that's just about it. So on that note, folks, again, let's flip back to the SPY and just take a look into the end of the day here, and that's the daily chart with all my trend lines on it. But if we go to the intraday, you can see what the market's doing. And again, very quiet here, sideways action for the last couple hours, extremely tight range. And again, the question I have is, when does this lower trend line break? Because when that breaks, that's going to be the key catalyst for more downside action. As long as you stay within this range, you could go up to the high of the range, come down to the low of the range, and just trade choppy sideways. But again, eventually you'll break that, and that's going to be something that I'll be watching for very closely. All right, guys, have a great afternoon, great evening. Come join us at InTheMoneyStocks.com. Take the 7-day free trial. We'll see you soon for more profits.